History has been made again, with Wall Street pumping Nvidia up $277 billion in just one day. And it doesn't just stop there. Markets were making new highs across the board, and Supermicro surged 33%, with it fulfilling a prophecy that we all talked about together. The buy the dip seems to be in. So what happens next for Nvidia, Supermicro, and the S&P as it approaches 5100? Well, one thing's for sure, volatility drops straight out of the market. But I suspect, along with many of you, that things are just getting spicy for markets around the world. Join us as we cover stocks, commodities, and cryptos together. Well, welcome back everyone to one of the largest daily shows on the internet where we talk about markets around the world. Nvidia was the talk of the town, and today we'll be covering the data and the options levels that you need to be watching. Just a quick reminder, as we move into a momentum-based market like this, you'll want to be on top of everything to do with options markets. Make sure to sign up for our VIP free weekly newsletter in the links in the description down below, as we have a special report coming this weekend. So what is Nvidia doing? Well, it turns out when Nvidia's stock is up, the chances are that the stock market is up. A very interesting dot plot here showing that for the last 14 to 16 months, AI and in particular, this stock has been driving momentum. And JP Morgan came out and said the momentum shift is now in line with Nvidia and what it's doing. This brings us to the idea now of a crazy market. Is this market mad? Is it crazy? Is it bonkers? Well, really, I think a lot of people are now going to be starting to say, are we in a bubble? Now, notoriously, when you get that word bubble, usually markets don't actually fall. And according to Bank of America, most historical asset bubbles have seen volatility rise substantially prior to the bubble peaks as assets begin to trade more momentum, sound familiar, and less on fundamental grounding. Now, of course, we had a great earnings report, but some of these stocks are starting to liken back to 2021, where we just had huge rallies going on across the boards and huge dumps. We're now sitting at a 0.7 in terms of standings, and these are all the other rallies and bubbles that are notable since the 1980s. Let's now scroll over to some weird stats that came out over the last 24 hours. The first one, 3% move up in the NASDAQ, but only 55% of issues were actually advancing. Only 5 other reads like this, and of course they all come from the dot-com bubble, and this is how they look over the next couple of weeks. Not too many data stats here, but some weird 6 and 1 year kind of reads, and obviously some great momentum shifts in a lot of cases when it comes to the short-term action. Here's another one that's weird in general, which is a S&P 500 read, where over 60 years of data, when we see a 2% rise that comes from the S&P and we have less than 60% of volume flowing into rising issues, we usually are at the bottom of markets or we're at a secondary kind of fly high period. Now, this is something that happened back in 2020 where we saw a huge rally come from this point. So not too many reads here, but some strange history-making stuff coming out across the world in markets. In our previous report and our video that we made, we talked about the idea that the bears might be sitting around 50-10 to 50-20. By the time the market actually opened up, though, we were already making new highs at 50-50. No structural change here meant that shorters would have had to have used just options. And of course, that wasn't the best strategy over the last 24 hours. But once we took the high out, we were always going to be moving towards 5100. And you can see it here on the options chart that when we moved through the 50-25 level, we were really open to move to the 5100, which is where we find ourselves almost at now. And it brings us to the point of every 50 points is very important. 5100 is a call wall. 5150 is a call wall, biggest one at the moment with most of the 0 DTE strikes, and 5200 is obviously a huge target, but also a call wall. Every 50-point increment will have kind of like squeezes to the next level of equilibrium, and we're going to have to be on top of the 0 DTEs now, as there's a lot of risk to both the upside and the downside when it comes to these momentum shifts. Speaking of potential decoupling of the markets, we've already been seeing what was crashing the market back in 23 now doesn't seem to be a concern. S&P 500 traders don't care anymore about what the Fed rates are doing. And while we're seeing cuts getting taken out of the market, this has become the plain sight problem that no one is addressing just yet. And a lot of that comes back to bonds. A lot of you correctly stating that you were seeing high yield junk bonds, which we reported on, and also just general bonds not falling as much and not freaking out, just remaining in a sideways action, which is very important. And we'll look at it later. If bonds go down and the market's going up, I always go with the bonds market in those cases. So that's not what's happening right now, and it could mean that there's still more highs to come. JP Morgan recently suggesting that investors are completely ignoring the anticipation of cuts, and that no longer is what the stock market is based on. I think that that's a no shit kind of Sherlock kind of action. And of course, we know here that SMCI, Nvidia, and PanW are, just to name a couple of stocks that you'll be wanting to watch like a hawk. And specifically, SMCI doing something that we spoke about just a few days ago with a buy the dip scenario. You can see here a post we posted over on our X account, links in the description down below, where we talk about two scenarios. And there really were only two scenarios. We were generally going to see a buy the dip, maybe not 33% in one day, but certainly a buy the dip scenario. And then we're usually going to see a sideways market for the next 3 to 6 months or a sell-off market. So this is a huge deal. 33% is peaking FOMO. It reminds me of an AMC style situation, although it's on a better style stock. And these situations don't tend to end that well, and they usually create a lot of opportunity in terms of volatility. We'll look at the chart later on in today's video, so stick around for that. When it comes to, of course, federal funds rate futures, you can see why the markets aren't caring. They're getting so close now to where they were in October when they were freaking out. And this is the switch that's happened since the start of the year, as less rate cuts seem to come through. And eventually the market's probably going to crack it at that. But for now, it's not happening. And why is it not happening? Well, stock net call volume is blowing out big time. I'd like to see an update on this. This chart was taken just a few days ago, but this will already be a lot higher. Calls coming in big time, not quite at the extremes of 21, but certainly in the extremes of standard deviation moves. This is a point where you want to be ultra careful, and obviously you want to ride momentum, single stocks. I think it's even better than indices at this stage. And of course, there are always opportunities in single stocks and different sectors and all sorts of things going on in the markets. We've already talked a lot about overseas markets being potential opportunities, and so far so good for some of those. What about the sentiment scoring system? Well, when we take all the surveys across the board, of course, it's a contrarian indicator. At the moment, it's in a theoretical sell level. And we haven't seen a strong buy yet since October. But this is because, of course, we have calls everywhere in this market right now, and we've got that kind of positive gamma environment. If we do move to a negative gamma, we'll be the first to talk about it here on the channel, and we'll explain what that means should it occur. But for now, markets still remain in positive gamma, and they still remain above that 20-day moving average, which means that swing traders and bigger bears can't really get involved yet. It's just not profitable to do so in terms of the market maker's perspective. That may be about to change, though, at any day, especially if Nvidia gets one of those multiple day huge sells of upwards of around 15%. Let's now talk about rotation, because there are some good signs here. Industrials and financials have actually rotated up recently. Now, this is a positive sign for markets. I'll put it in the next video, but I think the read is when you see both of these making new highs in the ways that they were, 97% of the time markets were bullish. There's a lot of read data on that as well over the next 12 months. But little energy, the most hated sector for a while now, is starting to poke its head back up here, and it's starting to improve. Now, this is a very important point for energy, and of course, we'll be looking at oil later on to talk about the break levels, but that's something that we do need to be watching. The median S&P 500 stock short interest as a percentage of market cap, it's really low, and it has been for quite a while. So, of course, that's not really leading into maybe that much fear that's going into markets right now, but it's interesting to see. And CTAs, while they were reducing ahead of Nvidia, straight after we saw that announcement, guess what they did? Yeah, you'd be probably right if you guessed they were buying it up. Yep, unfortunately, they were back into being positive again. They were probably a little bit skeptical of whether the stock could do well. We saw obviously a 9% sell-off on Nvidia, sending the market back down to the daily 20. But as soon as that announcement came out, they bought up big time, creating a huge flurry that was going into markets. For big bulls out there, this is something we spoke about in November and October of last year, and I thought I'd bring it back right now just to really reiterate that it is not unusual when we see Zweig breadth trusts to have a very aggressive market. In fact, 93.3% of the time, we were bullish over the next 252 days to a capacity of 20%. So it is not unusual to see markets doing really well. And of course, they are doing exceptionally well since that read. What about election years? This is one I've been talking about a lot, and that's of course based on seasonal patterns. And generally it happens after the middle of Feb, which of course we've passed now. And when we have sitting presidents running, we do tend to see weakness, specifically into March, which could still come. And then of course we usually have a pretty good rally across the board. If a correction was going to come, this is generally the time it would occur. And usually it affects the Russell 2000, 1K, and the NASDAQ the most. So these are the reads in previous election years. So you can see the up-down ratios. The S&P 500, less affected. In fact, it sometimes is neutralized during this point of view. And a lot of it's because we've got the big earnings out of the way. Everyone gets hyper. They all buy in. And then all of a sudden, we basically dump after that period when there's not as many catalysts. And of course, we'll need to be watching some of those catalysts, specifically SMCI and NVIDIA. And I think even PanW are going to be some big stocks to be watching. I've left this chart in just so everyone can take a picture of it if you're interested. And what that is it's slow cycles versus fast cycles. The speed at which central bankers cut rates will tell us a lot about whether the economy is truly healthy or not. If they start freaking out and cutting quickly, something's totally broken. And do remember, at the moment, the markets are riding high because global financial stress indices not even down. They're actually back to really showing strength across the board. Now, you might think this is a contrarian indicator. Often, just as everything looks fantastic, it's not so good. And then, of course, when everything looks horrible, it's potentially a good buy zone. That's, of course, that buy when others are fearful, and of course sell when others are greedy, which we're starting to see in the market again. One of the trigger points that we've mentioned a couple of times has been 16 on the VIX. We tried to break it 3 times this week and last week, but we were unable to get through. A daily close above 16 exposes a switch in gamma, which could cause what we call Volmageddon. Now, this is something that happened back in 2018. We don't have it right now because, of course, the VIX got crushed back down. But if vol does go up, pay attention to it. It's going to be worthwhile. Before we talked about the idea of abundance, there are many opportunities out there. And one that we've spoken about quite a few times has been the bounce in probably the most hated market in the world at the moment, which is, of course, the Chinese market. We've had big thrust that came through about 3 weeks ago in terms of the data. And we've already shared here a few times that we had a panic breadth kind of level. We had, of course, a very strong read from these panic breadths. We've had the Lunar New Year, which tends to lead into bullishness, which it has so far. The Chinese stocks tend to do well after a regulator change because, of course, the government's getting involved. And we also had defined outcome funds, which usually means everyone's freaking out, happening right on the lows. So things have been actually improving in the market, although the headlines are horrendous. So when you read the headlines, they look terrible, but at the same time, the price action's actually been improving, which we'll talk about again later on today's show, and we've seen it quite a few times. When we go through volume, it becomes clear that there are some large trades going on, and I think there were some TP zones that were going through with big traders, Wall Street traders, where they were selling some of their S&P 500 funds ahead of the NVIDIA earnings. You can see here, it's not a joke how many were dark pool activity and how many were clustered around those highs around the 5K. And of course, we know why. But NVIDIA sent it back up. So the price action here at the moment, super bullish. But if we do stop and we end up seeing a huge sell, we could be going into what we call a Wyckoff distribution. And that's going to be a huge false move. So stay tuned for it. Just some dark pool activity. And speaking of other dark pool activity, we've seen some come through on the VIX as well. So if this continues to cluster, can be an early warning sign. Ultimately, if we don't see price action, which we haven't had, because of course we're never getting through that daily 20 moving average at this stage, then we're not really necessarily super worried about the markets just yet. So just remember, the trend is all green, all good until that happens. When we go to options, it's a big world here. 47 million almost in terms of overall option output, 58% calls, still a huge amount of calls, 30% retail participation in the single legs. And you'll notice that the big ones were up the top. 1.5 mil on the call side for NVIDIA, just a huge day, 16%. 33 on Supermicro, 5.57 times volume. And we also saw anything to do with chips, basically AMD, etc., all showing big changes when it comes to the overall options activity. Some other stuff was going on here as well. We even saw things like ProShares, Ultra Qs, TQQs getting huge amounts of trades on the call side. showing us is there's a lot of activity in options, and it's a mixture of probably huge Wall Street players taking advantage of these blow-off style conditions, momentum style trading becoming really the big thing over the last 3 weeks. And I expect that to continue to be the big thing here. And how fast these markets are moving just shows that algorithms are piling in along with retail traders. Stay tuned for more investigation into options as well on the channel, as we'll be covering that very, very soon in more detail. So let's get through what's going on with the charts. First up, skew. We mentioned that it got crushed the other day, which is certainly unusual. Now, this is one bear reading. Of course, we're looking for more than one bear reading. We're looking for quite a few. So skew got crushed, obviously pushed back up. Not a great sign for markets, certainly something we were looking at. We've also been looking at the S&P 500 and the Fed, and we can see here that central banks around the world are not really coupled with this current move. So they're not injecting, they're slightly holding, if not taking away some of the market liquidity, and yields continue to move higher. So you can see here that actually we are completely ignoring yields, and I expect this to eventually break the market because, of course, 4.7% shows us higher for longer on the US 2-year. 10-year was also up, but this one here starting to get a bit of a problem. And just remember, the US 02Y versus US 10Y is a combo code that you'll want on the charts. We haven't mentioned it for a while, but you don't really need to freak out about markets properly until this thing uninverts. So until it gets underneath 1%, I wouldn't worry too much about like some kind of weird recession or anything like that. Just remember that's an important factor. As a lot of you in the comments correctly pointed out, junk bonds and bonds in general with our bonds indicator were not freaking out enough or at all really ahead of the NVIDIA earnings. High yield junk holding its own, considering that we're seeing yields going up. And if we have a look here at our bond indicator, it almost made a new high. So again, if bonds are sideways or up and the market's going up, that's a tick. If bonds get crushed and the market's going up, big X. You need to be paying attention to bonds. Don't worry, we cover it here every day, so we'll be constantly talking about it if needed. What about copper? A great trade recently, one of our favorites, working very nicely, continuing to go up. I'd like to see copper break through the 3.95 to 4 ratio. And of course, we haven't seen that yet from copper, but we will be watching for it. The US dollar is very weird because it actually fell huge during the session, then regained itself to end up as a bullish hammer. Now, I've been looking at this with the euro as the proxy trade, and you can see here that we have quite a lot of supply over on the left-hand side with some interesting level breaks, especially the last previous daily high, which kind of sits around here at 104 for the dollar index. If the dollar does manage to break back up above here, it could start to really fly, as yields would probably be breaking past that 2-year 4.75 level. And all of this could be, a sign, certainly alerts to be set across the board. But dollar index getting very interesting. If we end up seeing a closure underneath this last wick, I think the US dollar is really going to get hit. Euro is probably going to start flying. But if we get that rally through this level, and you can see here the trend line even going down through it, there's a good chance that we're actually going to see a boost in US dollar trades. Currency traders would be very excited about that dollar chart. What about oil? So far, so good. It's held the zone, a bit slow. Like to see this through $80 so we can move towards our 82 to 84.50 target. But this is starting to look a little bit better here. It held the level of demand. It's basically got a higher highs and higher lows for now. And we're looking for this thing above 80. If it does happen, it's going to be good for energy, which we talked about before as a sector. And it's been lagging very, very hard. And of course, oil would be breaching that important basing structure. Also look at UK oil on the charts, which is Brent. And you can see here, very nice base structure as well, which is trying to break through again, series of higher highs and higher lows. It's so close, but it hasn't quite catalysted through. And I think that's going to be yields, dollar, and oil all at the same time if it's going to happen. It's going to be very interesting. Gold, we mentioned in the previous session that we thought it was weak around here. Most traded zone hit, weakness ensued. We're back in these levels. I guess it still has to be weakness around this level, specifically, especially if dollar does end up rising back up. Look, technically gold doesn't like yields up either, but it's becoming a bit of a stagflationary potential environment. So that's the only time that gold can trade weirdly. So I think at this stage, it's gold bearish until it breaches past this level up here, the most traded zone. and then it becomes bullish for at least those sessions. Day traders would be on that one quite heavily. What about Tesla? Disappointing, really. To be only up 1.36% on the session, it's not really great for this stock. I'd like to have seen it go through 200 and close. We know there's a massive call wall at 200, and that will probably switch into a fairly positive gamma style environment at that level and start to squeeze or at least move higher from the options perspective. We have not seen 200 breach yet with a closure, so unfortunately we don't have momentum on Tesla's side, but the base remains good and it remains like a stock that looks like it could fly at any point, up multiple percentage points. I'd like to see it through 200 though fairly soon, as I'm sure Tesla bulls would. What about Nvidia? Well, this stock, that's wild. I got to say, I love witnessing history. Obviously, I get pretty passionate about markets because I've been doing this for a long time, but I love how we always see new things that are exciting. Now, if you said 16.4%, I probably would have believed you because I've seen a lot of these things before, but 16.4% is no joke. That almost $80 billion of market cap, that takes Nvidia now, just out of interest, to $1.94 trillion. So it might even be trying to get into the $2 trillion club in this rally. There are no signs of weakness yet. As we've reported several times, we had potentially buy the rumor, sell the fact. Obviously, it smashed the lights out. It sold into the earnings, regained pretty much all of that. So you can see here, then kept shooting up because, of course, it's getting forward earnings on it now in terms of what the expectations are. But this one will eventually end badly. Nvidia is well known to do this. If you've been trading it for a few years, it loves a good rally, it loves getting wild, and then it loves dumping a huge percentage of its stock. So if you actually go through some of the old history runs, 21 notably, a massive move, especially off the earnings, and then suddenly it all got collapsed. And what we're looking for is that collapse. And we do not have it yet on Nvidia, so it is all green, all good for now. Targets that people are going to be setting, well, of course, 800 is a fairly decent level for it. Once it got through 750, 800 becomes very likely. Then you go towards 900. Then you go towards the magical 1K, which a lot of people are reading into. There are no real weaknesses in this market at this stage. So it is a momentum-based trade, but it will end up getting incredibly wild. I would not be surprised at all over a 3-day period for Nvidia to drop 15% or more at one point soon. But we haven't seen it yet. So we'll continue to watch on the sidelines or in it if you're lucky enough to be an investor or you're trading it long. Options are expensive though. They're on about 93rd percentile or something, and probably even more. They're probably 100th percentile now when it comes to how expensive they are. Let's talk SMCI. So as we mentioned over on our X account, the scenarios were buy the dip or buy the dip in terms of generally what we see with similar scenarios. Now, because it rallied really not off itself, but it rallied off Nvidia, we probably have a bit of a false rally here, and there's a good chance that this will be a weakness period. Now, to go against something like this, because it's a guess, you're going to need to think about options, and obviously you've got to practice your own risk management, do your own things. And as I mentioned often, patience, reaction, don't predict. There are replicable concepts within what it's actually done. It may seem mad, but the chances of the buy the dip was actually fairly good. And the chances of this being a problem zone between 975 and its previous high of 1,076 is relatively high as well. So it's a very interesting zone, incredibly expensive options, and I'd be loving to see. I think this one's going to be just interesting to see how it plays out, and it's a wild one for people that are wild out there on markets. But be risk averse, guys. It's a very risky type of trade if you don't know what you're doing. What about the Magnificent 7, or as I should be calling it, Mag 6? New all-time highs, Nvidia obviously rallying this thing up, and it continues to hold the magical 20 daily moving average. So until that's taken out, it's all green, all good, I guess, on these markets. Speaking of all green, all good, the Chinese stock market continued to do well. As I was actually recording the previous session, we were breaching through 16.5. That obviously brought some nice momentum trades for it. A few people have been messaging me saying this has been pretty sweet. Yeah, it's no Nvidia in one day, but it is quite replicable and it's looking quite nice. And there's a lot of different combo codes for it. And obviously the data suggests that could continue to run into maybe like a 17,250 or even an 18K kind of level. This market has been beaten down. These are the first signs of decent recovery. I would like to see it through the weekly 20 moving average, which you can see here on the HSI. And there are, some okay signs there from price action standpoint. If you read the fundamentals though, you're never going to like it. It looks absolutely shocking. But, the markets are down 80% for that reason. US 2K, what have we got here? Well, not much movement, actually. It wasn't a 2K-led market. And as we saw before, this tends to be a bit of a weakness period for the US 2K. I'm still bullish on the concept of the rest of the year for the 2K because it's so far behind the rest of the market and because it usually does play catch up if the economy truly is strengthening, which some stats say it is. Some say it's not. But yeah, we've got here basically an ascending higher highs and higher lows for now. And it's just kind of stuck in the middle of that range. So nothing too interesting there. Qs, big move up, obviously a huge rally. We're starting to get into that nosebleed territory for it. I'll report if we get some type of TD13 on this as well. That can be a turning point for markets. But again, it's just one read. We're in uncharted territory, almost at all-time highs. We need to get price action into the favor of course, the bears. And that's going to come back to the US 500 if you're looking at it. The S&P must get under the daily 20-moving average. We've mentioned it several times. It keeps coming here. This time it came here with a lower high, which actually did look ominous, but then NVIDIA crushed it up. So at this point, it's just, each 50-point increment is kind of the next break zone. The trend is up at this stage, and to go against it, you're going to have to just use options and have your risk management in there. Usually a period of seasonal weakness comes through at this time, but we haven't seen proper breaks yet. So we'll be watching, and obviously we're continuing to run that kind of rally for now on the smaller timeframes. Let's move over to Bitcoin because it's trading much more like a normal market in some ways from the perspective of its weakening where we thought it should weaken. So this is exactly where we thought it should weaken. It hit into some big kind of resistance zones. And for now, it could be that this was the false break or the UT, which could be happening also on the stock market. Remember, if it gets crushed off this level, I think we're going to know a lot of information about what we want to see. But for now, bulls are in control. Bitcoin, you can see here, if it breaches underneath 50,700 and doesn't instantly reject back up, if it doesn't instantly reject back up very, very quick within that session, we're probably looking at a significant pullback for Bitcoin and therefore a pullback through the other coins. Ethereum is starting to get a little bit more of momentum behind it. So obviously it's moving through almost to the 3K level, which is a huge level for it. And if it does get through 3K, the next stop for Ethereum is actually about 3,500. So this is what we call an FBTC combo. This week's been absolutely all about NVIDIA, but we will talk about Bitcoin and Ethereum and, of course, the links between them because crypto's been pretty good in 24 so far. And just a reminder again, if you enjoyed today's show, if you like what we're covering here, make sure to subscribe, guys. Sign up to the free weekly newsletter. We've got some banger content coming out soon. The Australian bird. But anyway, it's going to be very, very good, and I think you'll enjoy it. And it's completely free. Links in the description down below. Thanks so much for watching. We'll see you in the next one, and bye for now.